Hey guys, Jason here from Chart Guys How to Trade. In this program, we look at trades that actually happen that we talked about inside the Chart Guys community, and we break them down and talk a little bit about our thought process. Today, I've got 3 equilibriums that I managed to trade today. One of them not so successfully, 2 of them pretty successfully. So we'll take a look at that, how we managed the trades and what we did with them. But before we do, we need to talk about a little bit about what an equilibrium actually is. So let's go over here into the blank part of our chart, and we're going to draw a little bit of price action. So you guys know what trends are. They go higher with higher highs, and here are higher highs and are higher lows, and they gradually move in one direction. The other day we talked about bull flags, where we have a big push, we have some brief consolidation, and we have continuation. That's one nice consolidation pattern. Another type of consolidation pattern is when you have a push and then you get into a pennant formation. Basically, the price bounces around a little bit. It can go crazy, but overall it gets this tightening range. That is sort of the proto template of what an equilibrium is. An equilibrium has generally a big push to either direction, and then you have this moment where the bears who have been pushing in one direction, almost as if attached by an elastic, the elastic snaps and the price hits a low and then bounces right back up. Now there's going to be some momentum here, just like if you are bouncing a ball. Okay, here's our ball. We bounce it, and every subsequent bounce, it starts to lose a little bit of energy. That is what happens inside an equilibrium. So we have our impulse to the upside or to the downside, and we reach that point of finality where the bears or bulls are exhausted, the elastic snaps, and then we get a move in the other direction. Eventually, that too is going to result in a high where the opposing party, in this case the bulls, are out of momentum, and we see the price drop back down. Now, every time we get this bounce back and forth, we lose a little bit of momentum, and things start to tighten up. Now, in trading, we know that price compression like this generally results in something happening, and that is a resumption of volatility. Now, we can watch our volume, usually volume's down here. If we see volume decreasing over the course of our equilibrium pattern, then that chances are very good we're going to see a break. Now, the best part about these equilibriums are we've got these nice levels of support and resistance that continue to build over the duration of the pattern. And once one of these buckles, you got a pretty good idea about who is in control of the trade and what the most likely outcome is. Break bullish and break a resistance point. We see an explosion of that pent-up compression, that volume that is ready to burst out to the upside, pushing the price, and generally results in nice continuation in whatever direction it breaks. It can break bearish just as much as it can break bullish. The only real insight that we have into an equilibrium's direction is the origin, or where it came from. If we see a big drop, it's likely going to be a continuation to the downside. And if it's following a run up, it's likely continuation to the upside. So we got our basic points of an equilibrium. Now, when I'm watching an equilibrium, it's not often you get multiple perfect balance points like this. Usually you get 1, 2, 3, and 4 points. As soon as we start to pull away from the 4th point, I consider that to be an equilibrium, and I'm starting to look for the break of this level or the break of that level to give me some short-term guidance. Let's talk about this theory in actual practice. I got 3 examples. The first one is going to be on Netflix. We'll talk through that trade, and I'm going to go ahead and clear that chart, and I'm just going to drag ourselves over to Netflix during the day today. This is the 5-minute time frame, and this is where we see the foundations of our first equilibrium. So we are using the chart replay feature. First thing that jumps out at me as I was watching this morning is bulls are not really doing a heck of a lot here. We are at a nice place on the hourly time frame where we could look for a higher low, but we've been trading more or less just sideways for the last few days. So there's not a lot of direction here. And, you know, if you want to find a trade on Netflix, you got to wait for some nice clarity. So I'm looking at the 5-minute time frame. And first thing that pops out to me is, hey, maybe, just maybe, we got a little base of support here. Maybe this is going to be our low of day. Maybe we're going to see a little bit of a trend change. What do we need for that? Well, we got to defend this base of support here. So why don't we go ahead and mark it what our lowest low is? And then we need to see a 5-minute higher low and then a higher high, something to develop, because we don't have a lot of clarity in this range. We've got our high a day. We've got a little bit of a battle here, but otherwise, we're just pointing the downside. So we're not interested in a short position. The risk to reward isn't that great yet. We're not really interested in a long position because the bulls haven't shown up. So we'll let the market do its thing, come down for a possible double bottom, triple bottom, breakthrough. So big volume on that break. We hit a new low. We're not too worried about it though. We haven't taken a trade. We're just watching things and letting it develop. We come back up, we come back down, and we start to notice something. First of all, even when we're on the 5-minute time frame, I can see we dropped to 552.72. We came back up, we hit a high. Now we've got a higher low, and we've got ourselves a lower high. Now I know from my equilibrium goggles that is the foundations for an equilibrium somewhere, but it's definitely not on the 5-minute time frame. Maybe I can go in on the 2-minute time frame and look for an equilibrium. Now there it is. So we can look at this in a few ways. We can look at this as its individual pattern, with this low being the first point of contact. So 1, 2, 3, 4, or if you want to, you can go 1, 2, 3, 4, 5. Either way, we've got ourselves an equilibrium. So why don't we draw out what that would look like? It would be something like this. So we can continue to tighten, and what we're going to do is look for a break of one of the levels here. That's what's key about this equilibrium. So when I'm watching equilibriums, I just go and mark out some of my key levels. Right now, I need bulls over 554.61, or I need them under 553.10. It's okay to touch. It's rare. We don't like it. It generally will show you that the bulls are leaning, or the bears are leaning in one direction. But I have seen many support holds and equilibriums continue in the direction of the break. It is the break that's really key here. Now, admittedly, this is the trade that lost me a little bit of cash. What I was looking for was for the sideways boring hourly bulls to catch this low, establish an hourly higher low, and continue to the upside. But not trusting them too much, of course, I'm going to keep my stop losses relatively tight here. The problem for me on this particular trade was I got a little bit hasty. I took an entry as we approached to 553.10, expecting continuation inside this equilibrium because, again, I had a long bias on NFLX. I thought this equilibrium was going to be our turning point. The bears will be exhausted at this point because we did hit 2-minute oversold and got a nice little bounce. So I thought this was going to be our turning point. So I grabbed an entry about mid-range through this drop. Let's call it, where is the cursor? About 553.60, that seems right. And I had a stop at my new low of day. So two mistakes that I made. One, I didn't wait for the test and hold of 553.10. And as a result of that, we saw a tiny little bear break, a bigger bear break, and then eventually a mega bear break where I got stopped out all in the course of about 5 minutes. Now, the real key for me on this one was that, again, I did not take the time to allow this pattern to hold. And if I had waited for those bulls to step in while holding 553.10 and move back to the upside, I could have had a better entry and a much better stop loss because my stop loss would have been moved to the bottom of that low. It would be 553.10 rather than 552.72. Now, the reason I picked that is because I wanted to give myself a little bit of wiggle room. Nobody likes getting stopped out by a penny and then seeing the chart move in the other direction. So that is a good example of an equilibrium. It was to the downside. We saw downside continuation. We didn't get a lot of substantial follow through, but it was enough to make a quick scalp worthwhile if you're playing a short position. Okay, that is equilibrium 1. Cost me some taco money today. The next one I want to look at is on PLTR. We actually have 2 of them on multiple time frames. All right, we are going to use the replay feature again. We're looking at PLTR today on the 2-minute time frame. I'm going to jump around a little bit because it's more important to show you first quickly context and then the pattern setup. So 2-minute time frame, we had nice 2-minute bulls for the duration of the first hour or so of trading, and we can look at this in a couple ways. I tried to look at this and try to form up a descending wedge, but in the morning what I ended up drawing was a nice little 2-minute channel, something like this. I ignore the first bit of range of the day, and then I go and grab my lows down here, and you develop into a 2-minute channel. You're not really able to force fit. You could force fit, of course. You can force fit anything you want to, but you want to stick with your rules. I got myself a 2-minute channel. Here's a tip that I like to share. When I'm drawing a pattern and I want my price information obviously to fit the bias, I'm trying to draw something, I'm expecting it to be there. Try not to use the most recent data. If you have a pattern that's valid, then your current price action is going to be reflected in the setup of the preceding price action. So I should be able to draw using supports and have them extend out and have them be respected if I'm correct about my thesis. In this case, I've got an origin and an anchor. Down here, origin, anchor, a little bit better. And we got a 2-minute channel, and we are riding it to the upside. So we'll expect this to continue. Not really too interested in PLTR at this point. Break pattern, then we'd start to see a bit of a decline, a slight uptick in bear volume, and more or less just sort of go sideways for a little while. So I'm going to skip ahead here. All right, we jumped ahead, and what should stand out to you is that we're going sideways, and that's about it. We get 23.90, 23.99, we pull back, we get 23.75, and overall we're not really doing a heck of a lot. Now, the key to spotting equilibriums, and there are some tools that we can utilize to help us with that, is that we're looking for overall higher lows and higher highs, because this is an equilibrium that doesn't show up on a 2-minute time frame. Let's draw that a little bit better. Let's try to respect our actual levels. So if I'm drawing in here, this is my low, and I got slightly higher lows with slightly lower highs. So it's an equilibrium. Yep. Is it on the 2-minute time frame? No, it doesn't look like it. 5-minute time frame, we're getting closer. Here's a high, low, high, low. It is a 15-minute equilibrium, and probably even more effectively drawn on a 10-minute time frame, or maybe even the 8-minute time frame. Don't use these to trade, but I am trying to show you how we're getting this range. High, low, lower high, higher low. Now, the real key and the tools that I alluded to in a few minutes ago is that we can use our fun inside bars to help us determine whether or not we are in actual moments of equilibrium. Inside bars are a macro view of balance. They're showing us that the entire trading range is contained inside a previous range. Chances are we're not trending, and what we're doing is seeing some price compression, some indecision, and we're going to expect a little bit of volatility here. So we know we've got ourselves a 15-minute equilibrium. Let's go clear our chart. Let's draw in our friendly little raise, my horizontal raise, which I like so much, 24.15. Now what should jump out to you as soon as I drop this cursor is the top of this high is actually the hourly inside bars high. And then we get our low down here, and our equilibrium is formed, and it's formed the 4th point of contact because we have pulled away from that level in a substantial way. On the 5-minute time frame, we've closed a couple candles and we're moving in that direction. So we've got a really nice moment of balance. We have an hour's action trading inside this range, and what we're looking for is twofold. One, a break of our equilibrium over 23.99 or 23.75, and we're going to be looking for that also to be represented on our hourly inside bar, which is looking for a bull break of 23.49. Now over here, you can see that the old chart replay hasn't really played or isn't hiding any information. So yes, we do get a pretty significant bull break on this equilibrium. So 2 ways to recognize it. There's our break, and then we see the big volume pouring in, and the bulls go pretty quickly to the upside. So a beautiful example of an equilibrium, and this more than paid for my mistake on NFLX today, and it wasn't quite over because for the duration of the day, let me load up my other chart here so I can follow along. Bulls were more or less relentless, consistently getting these 5-minute higher lows and higher highs, and if you were just looking for a reason to stop out and you were using your 5-minute higher lows, you got to basically get to the end of the day. If you're using a 2-minute time frame, looking for 2-minute higher lows, you didn't see any reason to exit, and you could have walked up for the duration of the day as well. Now, there is one more baby equilibrium in here because I did take some profits around 24, I think 24.70, something like that in here. Since we've got some pullback, 1-minute time frame gave us another equilibrium. So this is a good example of looking for micro patterns inside action. So where is equilibrium on this guy? Is it here? Well, we hit a higher high just by a titch, and we hit a lower low just by a titch. So you can make a case for this being a type of balance, but it wouldn't show up as an inside bar. No, the real equilibrium is actually right up here on a very, very small time frame. So let's go and circle that action, and then we'll see how it played out. So 1-minute time frame, let's go to the 15-second candles once again, my friends. Look at this little range. So in this case, we've got our high, Oh, here we go. Our high, market, come down, low, market, lower high, double top, double bottom, and then we break and continue. So this obviously is more difficult to see, but I want to show you that there are multiple equilibriums inside multiple time frames, and you have to be able to adapt, jump back and forth from time frames, and more importantly, I think, is being able to recognize when equilibriums are forming on smaller time frames. So you don't necessarily need to jump to the 15-second. You can take a look at this and say, look, we got our highs and our lows. Even if I want to play less aggressively, I can go like this, plug in my high, plug in my low, and I'll play the break of those two. Now, one thing I did forget to say was how would I set my equilibriums or how would I set my stops for my equilibrium on PLTR? I believe we looked at the 5-minute time frame in the end, or maybe it was the 8. Yes, it was the 8-minute time frame. All right, so let's go mark out our pattern again. Our high. Whoop. Come on now. Our low. You can do it. Got to give myself a little pep talk. And then our higher low here. Let's go back to our 5-minute time frame and look at that inside bar. So for me, I'm looking to break or to buy the break of $23.99 or $23.75. If I'm going to break bull, my stop loss is going to be $23.75, or I'm going to give myself a little bit more wiggle room. Although this isn't the low of day, if it was the low of day, I would set it just under the low of day to get that added bit of support. So my entry was going to be the break, and then my stop loss would be right at a new low. In the opposite direction, my entry would be on the break, and my stop loss would be a new high that the bulls should not be able to set if I'm correct about my thesis. And that, my friends, is a quick and dirty way to play these equilibriums. We'll keep following along with those, and hopefully we'll be able to find some more of them over the next few days. Should be an interesting trading day tomorrow. If you're enjoying these videos, please let me know how I can improve them. If you have any specific questions, happy to help you as much as I can. And appreciate the comments and the likes. It really does help with the old algorithm. And thanks so much for watching. Have a great day. I don't believe this is consensual. Yikes. Where are the pigs? Oh. Interrupt your nap.